Hi guys, welcome back. So today we have a mix of a good and bad day. The EV sector started off well, especially the Chinese EVs, and then got driven down by the market, especially the tech sector. I think Tesla is leading the dip for most of the day, and we're having a bit of a divergence here. So let's talk about what happened, and I'll give my point of view on where it's going, whether we are having a long-term correction or medium-term correction. Okay? So the brightest star of the day would be Xiaopeng, obviously. The Q3 earning report result is beating all the estimates. And it's like I said yesterday on the Discord, we know about the delivery already. So what we need to look at is mainly the margin and the Q4 guidance. And they turn out both quite good. The margin rate is climbing, and the Q4 delivery number is much beyond expectation. And if this become true, then Xiaopeng would be the leader in terms of delivery out of the three Chinese EV among Xiaopeng, NIO, and Li Auto. With this result, the share price just directly kicked off and broken the resistance of 50 that had been going on and teasing for a while. So congratulations for all the diamond hands for Xiaopeng or the Chinese EV holders. On this day and this day, I had both reminded the supports at 44 and 46. So if you had grabbed the dip, you should be making good profit by now. Especially on this day, we bought call option for it. Now that the resistance of 50 is pushed through, the next target would be 56 first target, and then next target after that would be 74, previous high. When the sector grows, they usually grow together, and this is when they would be the strongest when they synchronize. So you can see that NIO is also having a good strength. Yesterday, a nice gap up, recovered the few supports that it was broken, and today it continued. Not as fast as Xiaopeng because it's also at the resistance level. For NIO, I've also stressed a few times on this day and this day when it reached the support of 40 and 38. So if you had grabbed the dip at support, you should be enjoying a good profit now. And I think it's not over yet. It might be shaky up and down movement a lot, but like I have analyzed a few videos back on my NIO video, I think the cost for the institution is around 38 on average. So at this point, they don't have much profit to take yet. So it's just a matter of time, I think. On November 10, I did a little price prediction for the movement. It was this day when NIO drove for consecutive days, even when Tesla was rising. So a lot of people got worried that it would make another leg down like before, especially after the reaction of the earning. And I said institutions might be accumulating shares towards NIO days, so every dip would be the good opportunity to grab the dip. And I referred to last year, it formed a consolidation in a triangle, and maybe this year we would do something similar. Not much room to dip, but maybe quick dips and bounce up, kind of drain your patience. And so far we have been seeing somewhat of a triangle pattern. So far it has been moving up and down, and we have not been making higher highs, mainly consolidating. And we cannot confirm until it breaks out of this trend line. Then it would mark the beginning of the rally, I think. A while ago, a lot of people got so frustrated with the Chinese EV and said that when Tesla rise, they don't follow, but when Tesla drop, they would drop more. And I said I thought the smart money is actually doing the opposite. Today, it's one of those days we see the divergence, that the Chinese EV is now following the drop of Tesla. Like I said in the Discord before the market opened yesterday, that the Chinese EV, the CATL, seemed to be having a breakout. So I thought that might be the turn for the Chinese EV. So yes, right now, other than Tesla being the leader of EV, I think CATL is becoming the Chinese version of that to be leading the Chinese EV sector and act as an indicator. So what's gonna happen to Tesla? For Tesla, I pointed out the potential run back in summer a few months ago, and even after the strong breakout and make the all-time high, I still said it would still keep growing. And until this day during the weekend, I suggested for the short-term trades to take profit. And 2 weeks ago when Tesla suddenly had a fast dip, I said I don't think Tesla is gonna crash and proposed this movement that it might be forming a consolidation on this platform between the 900 range to the previous high and probably form a triangle again. And if Tesla can consolidate on this platform without much breakout or crashing, then maybe it is the opportunity for the other EV players such as the Chinese EVs. So a few times I've suggested that maybe the institutions are silently taking profit and moving it into the others that have not rise up that much yet, like NIO and Xiaopeng, and so on. And I think this trend might continue, especially NIO is moving towards New Day. And Xiaopeng's Q4 is performing exceptionally. Right now, a lot of the young people are starting to like the brand more and more. They think it's young and cool, creative, and more special than a bigger brand, something like Tesla, which is more what they would consider general design, general features. So I think Xiaopeng's positioning right now is speaking more to the younger demographic. And their Q4 guidance totally show this. Today, Nasdaq also took a little dip in the morning, at most dipping 1.5%. And VIX also had a spike up to 9%. These 2 days, I think it's some selling the news action after the continuation of Jerome Powell to stay as the Fed's chairman. So it was good news and the market is selling off. So it looks pretty scary. Would this be the beginning of the correction that a lot of people have been anticipating? And my opinion is that I don't think this is the beginning of the US stock correction, but more like a sector rotation from the previous hot stocks that have been growing almost every day into the stocks that have not followed so much this rally and still have got good fundamentals, like a lot of the companies in the S&P 500, some of them in the Russell 2000, and Dow Jones have also been lagging. So I think this is a chance for them to catch up a little bit. And the previous big tech that have been growing strong, like Tesla, Nvidia, even Apple, might need to cool off a little bit, but I don't think it would be a long correction for them though. Meanwhile, you know that I have been bullish on Russell 2000 for a while. When it was up there at 240s, I said wait for the pullback at least to the support of 233. And since that is broken yesterday, I think the next support should be 228. Today we have backtested that and got a good bounce off. I think it should have at least a short-term rebound from here. So that means some of the medium to small caps could have a rebound, but don't think it's all of them. Because this run up, sector-wise, it has been very much taking turn in terms of one sector has finished growing, then move on to the next sector. Very much in line, so don't think that it's all medium to small caps in general. For example, today it was the EV that was running up, but the solar sector took a big hit. But next time it might be different. The Hang Seng Index these past few days have been gapping down every day. The uptrend got broken since Alibaba reported earnings last week. So a lot of the capital have been moving out of the Hang Seng Index again. This might take a little bit effort to recover. Lately, even though the Shanghai Composite have been recovering quite strong, it did not help that much the Hang Seng Index. We are seeing a divergence here as well. So right now, the Hang Seng Index is not following the US index and it's not following the Shanghai Composite. It's completely on its own. We just have to look at the tech giant to see where it can go now. For the Hang Seng Index prediction, we have to look at Tencent, Alibaba, JD, Meituan, Baidu, Xiaomi, etc. individually to see where the sentiment is going. But for now, I think a lot of the big tech have shown the bottom already. But really, except Alibaba and maybe Pinduoduo as well. So I think as long as we don't have a clear bottom or reversal for Alibaba, investors might be still skeptical about the Hang Seng Index. Yesterday, it gapped down below the 249 support, and to have 3 gap down consecutively, it looks very much bearish. But at least right now, we have not made lower lows than 2 weeks ago, and at least it's not big volume, like something like this one, or this one, like the long red bar dropping from the beginning to the end with big volume. At least we're not that yet, so it's definitely less damaging. As long as this previous low has not been broken by much. On the good side, we could still be making a head and shoulder bottom. So as long as we don't break this low by much. So that's on the positive side. On the negative side, the gap down really looks depressing. So it can very much have more bearish momentum. So right now, I think we need to look at Alibaba. We need to watch out closely for any sign of reversal. The day it reported earnings, I said that it needs to make a new low to be making another divergence. So a second time divergence. And the next level I'll be looking at would be 132/133. And today we have reached the lowest of 133. So I had fearlessly add some dip here, but there's no guarantee. So I set a stop loss at 132 in case it dip below, then it might move to 127. So Alibaba is the second largest market cap after Tencent to drive the HSI. So I think there is some of that factor to influence the bad sentiment. That's why I think until Alibaba shows signs of strength, reversal, we might still be lacking for the HSI. But on the positive side, if the Hang Seng Index really makes lower low, then there's the possibility that it might really backtest this trend line again, which I have been saying and waiting for quite a while. And if that happens, I think it would be a huge opportunity. So let's see, that's the good side of it. So I don't think there is a medium-term correction coming right up right now, but rather a sector rotation. Plus, right now it's getting towards the Thanksgiving Day and Christmas. A lot of hedge fund and Wall Streets are on holiday mood or getting into the holiday mood. So I don't think there would be a big crash at this moment. But maybe take a look at the sector that benefits from the holiday, like some of the retail or even airplane. I think airline has not grown for a while. It has been correcting for the whole year. See, this ETF for airline, today we are exactly at the level 1 year ago. So it has been consolidating for 1 year. Maybe it's the time to revisit it again. Now that's it for today, and if you have enjoyed this video, please give me a big like and write me a great comment, and I'll see you in my next video. That's it guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.